Chair, I ask you.
His family and his friends. Mr. Speaker, this war powers resolution introduced by Representative McGovern would put an immediate end to this administration's reckless military interventions in Venezuela. We cannot allow the Constitution to be usurped by one president who believes he can unilaterally declare war, invade a sovereign nation, and buck the rules-based international system we helped build. If the House fails to check President Trump's aggression today, it will not end in Venezuela. I know the White House is paying close attention to this vote. And if we don't stand now and reassert our Article 1 power over matters of war and peace, we will have abdicated one of our most solemn responsibilities.
Hello, everybody, and welcome back to Red Eagle Politics. Make sure you guys like this video down below and subscribe to the channel if you are new. So, there was a little-known special election that took place last night in the state of Georgia. And we've seen a lot of these special elections take place both during Donald Trump's presidency as well as during Joe Biden's presidency, as well as Trump's first term, where Democrats massively have overperformed. It's given them this false sense of confidence that it doesn't matter. This is like proof that Blumph is over, Blumph is cooked, even though they don't have ridiculously high turnout, and even though the ensuing elections, whether it's been like a midterm year like 22 or a presidential year like 24, it usually at least goes back to baseline. However, this was a unique election in and of itself, because even though you could say, well, it was technically a jungle primary, whatever, it doesn't really matter. It's Democrat versus Republican, and Republicans did combine for roughly 63.1% of the vote. The Democrat got 37% of the vote. And this is crucial for Republicans in a way, you could say, because it was a rare overperformance, because Donald Trump in this district, he only won it by, I believe, 21-point-something%. So this is actually a 2 to 3 point overperformance for the Republicans. Now, do I think we should read too much into this election? I think the answer is no. However, it does kind of drive a dagger at this narrative that in every single jurisdiction, Republicans are just getting decimated, getting destroyed. They have underperformed over the past few months a lot in like these Virginia special elections. Virginia. Places where Donald Trump got a surge of like new voters, and those new voters aren't really showing up. And this kind of held up in that Tennessee election where Republicans didn't underperform by all that much compared to the baseline, and that was a much higher turnout election. But even so, it's much lower turnout than what we will likely see this November, even though compared to 2022, it was comparable, but 2022 had a really poor turnout for Republicans or just anyone in general in the state of Tennessee. So that election wasn't really midterm level compared to 2018 when there were like 100,000 more votes or so, give or take, than there were in that special election.
All right. So the point is we're doing okay in Georgia. All right. Here's where we are on Railtown. 17,225,000 shares. It's a good job for you. Of course, it's not audited or anything. Sorry I'm on so late. I warned you. That should be it for this week, I think. But I don't know about next week. And then I've got at least 4 appointments in February. Just hope I get through them all. All right. Let's see what your comments are. Oh, I didn't sign in. Let's sign in. See where we are. We've only got half an hour till the thing closes. Weather here is actually pretty warm. So I guess the cold isn't coming till Saturday. Okay, so finger motion is up. I show Go Logic as being 8 cents. I don't believe it. Railtown is 24 cents, 24.18.0033. MTEN is 0.02, 2 cents a share. 2 cents. So if you had paid $20, $28 thinking it was going to squeeze, you have 2 cents. ZJYL is 12 cents, 12.63. This Mashugana MGRX is down, it's 54.2. And then Fingers up 4 cents at 122. I don't know if there's a reason for that. The volume on Finger is 119,000. And it still shows up in my service as Property Management Corp of America. I don't know why. Let's see if I can see what's going on. Yeah, this doesn't make any sense. I guess Go Logic's worth something. I wouldn't trust it. The Nationals traded Mackenzie Gore to the Rangers. Would we get back 5 prospects? It's pretty amazing. Let's see what Yahoo's saying. No, it's seller boxed. So they're just giving you know, you can't get excited by these things. That's a destroyed, totally destroyed. Remember that guy with the shorts on, the CEO? All right. $23.89 on the bid for Railtown. The ask is $25.06. 51,083 is the volume. A Red Pepperoni. Jason Harbison. Jason has sent me things, a couple of things that I've shown you. I appreciate it, Jason. Silver Skyrocket, how are you doing? Today was okay. The doctor was nice. She's been in. I don't know how old she was. Her hair's dyed, but she did say she's never had a patient die in 20 years of being a doctor. I said, well, I got that going for me. We'll see. It was all right. It just sets up another appointment. We'll see. We shall see. CJ Yukon. Hey, William, added 5,000 more. All right. That's great, CJ Yukon. Exactly what to do. When the going gets tough, the tough buy Railtown. Fast Eddie. How are you? Delap. 49,200 super low volume. I show 51,830 now. I mean, I'm sure there's a lag. I don't know if it's that low volume. It certainly isn't taking the heaviness, that much effort to keep the stock in the red, so they're not selling a lot of stock. My guess is there's not a lot of buying either. I would imagine most people are just tired of it. It seems to be red every day, and when I first got all hepped up on this, I really didn't think we'd be talking about it in these contexts anyway. We might still be in the stock. But I really thought it was going to be 30 days, 45 days, 90 days, within which you were going to see confirmation that you wouldn't need to hear from me anymore. But it hasn't happened. And like I said yesterday, I think the biggest thing is the monthly update filed on January 8th with the Canadian Stock Exchange stated that Rail Engine is expected to be completed version 1, V1. I assume V means version, at the end of January. So I think that may be part of the puzzle piece of what is holding up whatever news they need to give out there to break the material information disclosure backlog. Silver Skyrock, no change in institutional holdings of RT. According to the footnote, the data is provided by Refinitiv AI. Well, I basically don't think there's much of an institutional positioning in Railtown at all. I don't remember the name. I remember a small position, but I don't know who owned it. It was really small, just insignificant. And then the biggest holders were Marwan, Corey, and one other guy. So, wow, CJ Yukon, 245, lowering your average to 46. That's cheaper than Tony the Tiger paid. He paid 48. Good job. Hey, Alan Weiss, how are you? Somebody here, Adela, GoLogic up 800%. It's just a trap. That when they get it in that seller box range, they're making such huge profits on trading. Don't chase GoLogic. Don't chase. Nothing's going on. And even if something's going on, they'll take it all back from you. And the guy running GoLogic, same guy that destroyed Logic 4-5 different times. He's a good guy. I think he's honest, but he can't help himself. He needs approval so much. Attaboy, that's a good dog. You're such a nice dog, that he signs these toxic deals. I don't know how anyone I don't know what goes through the mind of a CEO signing those toxic deals. There's just a suspension of belief, because you've got to look at, if you're trying to create value for shareholders or for your own, at least for your own interests, you've got to be able to calculate the per share value, one, of your existing enterprise, two, of anything good happening to it, and three, the combination of that. And the only way you can do that is if you know how many shares are out there. Now, you can't do anything in this corrupt market about the flooding of rehypothecated shares, but that's just the market we're in. But in terms of your own cap table, you can control how many shares are on that denominator. You're the CEO. Don't sign these things. All right, here's Ward Richardson. Good afternoon. Well, today is the last day of the quiet period. Microsoft lands $170 million Air Force cloud deal. Wow, it didn't go to Jeff Bezos. Microsoft will provide Azure support under the U.S. Air Force cloud. Wow. LOAT. That must be line of all trades. LOAT. L-O-A-T. LOAT. I guess. I don't know. I hear Iran is getting bombed this weekend. Could this trigger the market to crash? My experience is anything everybody knows about doesn't trigger. However, that's offset by the obvious situation where almost everybody knew about the crap mortgage market in 2007, 2008. So it eventually led to a collapse. That, in my mind, the knowledge of it, the existence of it, didn't cause the crash. What caused the crash was that the banksters stopped trusting each other. They stopped trusting Bear Stearns. They stopped trusting Lehman. That's just panic. That's panic in a professional environment. But that's saying if we give you money overnight, we're not sure we're getting it back. And it's that kind of fear that spreads through the market. When you add the heavy, the ability just to short endless shares that don't exist, I'm surprised any of these companies survived. But you sent that Blankfield, the bald-headed football player from Goldman Sachs, to the White House as the president said, this sucker's going down. And he got first look at all the books of Lehman and Shearson and others. First dibs on the good assets. I saw that under the first President Bush during the savings and loan crisis. The Bass brothers and a couple of other families that were Bush supporters, they had first crack at all the good assets of the S&Ls, and the good assets stayed with them. The bad assets went to the taxpayer. Happens all the time. I don't know. I don't personally think bombing Iran is going to cause a market crash. But it depends on the follow-on things. If the Straits of Hormuz are blockaded, if oil stops flowing, oil goes to $250 a barrel, the markets will crash. So oil price is a big factor. If it spreads somehow, if Iran were to launch a wave of destruction, for example, on Tel Aviv, that just wiped it out, that could that definitely could cause a crash. If Putin decided he's had enough and launched one of his Poseidon or whatever it's called weapons on the coast of New Jersey and New York from a submarine, that could, but it's those follow-on events, the reactions to it. But I don't think the US bombing Iran is going to start a market crash. I do think that this president is beholden not simply to neocons, he's beholden to Zionists, the Finks, the blacks, well, you can go through in your head all the wealthy men and women, Adelson, that surround him, who fund him, and they are just unmitigated supporters of the right-wing murdering arm of the Israel government. To me, it reminds me of how the Irish in America, which my dad was Irish, would send money to the IRA, proud, getting together, tears in their eye, drinking beer and joining the Irish clubs and gathering. They send money to Ireland with some vague memory of their grandparents coming or their parents coming from this sainted Green Isle, ISLE, not ISILE, not ISLE, Isle. Anyway, this Green Island. And they never think for a minute that it's actually going into terrorist hands and that those terrorists are murdering people, setting up bombs. And I think that's some of the connection here. A lot of these people giving money blindly to Israel and then getting our government to do it are ignoring the slaughter of hundreds of thousands of human beings in Gaza Strip. The murderous rages and pushes of Israel into Lebanon, Syria, Gaza Strip, the West Bank. And then this asinine comment that if we don't do something about Iran, within 2 months they'll have the bomb. Do you know the lying? I don't want to swear, but the lying, no good Nick that currently is prime minister at the top of whatever the party is, Likud party in Israel, Benjamin Netanyahu, and he spent his life in formative life in Philadelphia or somewhere, and his last name is something else. He's been saying the same thing. You can hear that same speech 30 years ago. What if two things about Iran? What if they notice we never bomb North Korea? For that matter, we never bomb Israel. But they notice we don't attack any countries who have a nuclear weapon. Maybe they put that in the back of their head. That may be one thing. But the other thing that might be going on, of course, no one has any understanding of the energy markets, and even experts don't, because nobody really knows. But I think it was 71, OPEC was strong, and it may have been 73, the first time they did it. Then the second time they raised prices was under Jimmy Carter. And so everybody blames Carter. But it wasn't his policies that got us there. each of the large countries in the Middle East ramped up their total reserves, so because the model that they used for production was based on total reserves. And I think what happened is, instead of just having proven reserves, probable reserves, impossible reserves, and even camel pasture reserves with risked numbers. In other words, Saudi Arabia went to 260 or 270 billion barrels. Well, in the past, that was all risked. And I think came out, I don't remember now, 60 million, 60 billion, 80 billion. Well, all of a sudden it jumps up to 270, might be 290. You can look it up. It's never gone down, ever gone down. What were Iran's oil reserves before and after OPEC? See if it answers it. Iran's oil reserves have remained vast. See, this isn't true, I don't think. I mean, you can believe it if you want. I mean, they're always going to be bigger than anybody else's. But let's just see what the numbers are. According to Google, Iran's oil reserves have remained vast, ranking among the world's largest, but their effective size and production fluctuated significantly because of OPEC's formation and geopolitical factors. With major reserve upgrades, they increased the number of reserves by 32 billion barrels in 2002. Pre-revolution peak, the production was 6 million barrels of oil per day. Okay, that doesn't help answer the question. They now claim 130 billion barrels of oil before further discoveries. I suppose it's such a huge country and it borders some areas where they might be able to find oil. As of 2025, Iran holds the world's third largest proven oil reserves, 209 billion barrels, ranking behind Venezuela and Saudi Arabia. I really question that. And maybe I need to show you all of the books I've read on this are in storage, so I can't just pull them out. I might have Matt Simmons here. I wonder if I have it right here. Maybe it's over there. I might have it. But anyway, what these OPEC countries did is let's just say world oil reserves by country. Okay. Thinking. Dumayetz. As of 2026, global proven oil reserves are estimated at 1.77 trillion barrels. I think that's ridiculously high. On the other hand, as prices go up and technology improves, they can expand the number of proven reserves. But I don't believe it. Venezuela has 303 billion barrels of oil, and it's the heavy oil, which our refineries process. Saudi Arabia the kingdom has 267 billion. Iran has 208 billion. Canada, 163 billion. Iraq, 145. That's probably closer to accurate than the others. Maybe not that magnitude, but it didn't all get taken. UAE, 113. Wow, what a country. Kuwait, 101. Russia, 80 billion barrels. United States, 74 billion barrels. Libya, 48 billion. So that's the top 10. Oh, God, please, can I ask something? All right, let me do it here. List countries, production of oil in barrels per year on average. I think these numbers are completely manipulated, much like other information we get. The United States leads global oil production, averaging 20 million barrels a day. And I got to say, I never thought that would happen. Followed by Saudi Arabia and Russia, each around 10 to 11 million barrels per day each. I don't know. So they say Saudi Arabia is producing 10.9 to 11.8 million barrels of oil per day. Their decline rates are 5 to 7% per day, per year in Saudi Arabia. So you go down by 500,000, half a million to almost 1 million barrels a day every year in the decline rate. I guess except for the Garwar field, which you're water flooding. All right, so let me ask anything. If a country produces 11 million barrels a day, how many barrels is that per year? I never give this number. I probably won't give it to me now. All right, so it's 4. That would be 4 million. It's 4 billion barrels a year. So when Saudi Arabia bumped its reserves from, I don't remember the number, 60 billion barrels to 270 billion barrels, it was in the 70s. So there's the 70s, the 80s, the 90s, the aughts, the teens. That's over 50 years ago. So 50 years times 4 million barrels, 4 billion barrels, sorry, 4 billion barrels. That's 4 billion times 50 years. That's 200 billion barrels produced. The reserves have never gone down. It doesn't make any sense. And I think that's the biggest reason the markets will crash, is when people realize that the OPEC numbers are all a charade. But if you apply this same logic to Iran, one of the reasons, and this is why I think Iran's done it, one of the reasons Iran might be pursuing nuclear technology is so they have nuclear power, just like we're building nuclear power for our AI grids. Iran doesn't have hydropower, at least not, they might have a small bit of it somewhere, but they don't have hydropower. And they don't really have anything for hard currency except their oil reserves. So I just did the Saudi numbers. I'll try to do it with the Iranian numbers at some point. But I would argue that the OPEC reserves are massively overstated, massively overstated. Now, there could be some technology that allows more recovery. For example, horizontal drilling and fracking. When I sat with the chairman of Halliburton, this years ago, he said they're doing that. 10,000 wells, something like that. So that might have kept the illusion going. But I would suggest to you that Iran is trying to produce nuclear power so it can power its modern economy, so it can sell oil and gas for hard currency. But we don't accept that because Netanyahu has a goal of greater Israel, which is a megamoniacal view, I guess, that Moses promised to these group of Jews out of Brooklyn and a couple of places in Europe that don't even believe in God, that he promised them half of the Middle East. And promises Moses makes 3,000 years ago, Moses can't keep the promise. So with the help of Susan Wiley, who was the chief of staff to Netanyahu, with the help of all these bankers, all Zionists, and Miriam Adelson's money, which she got from her husband, the United States will make sure that Israel's dream of taking over and attacking 7 countries and taking over an area, I don't know how big the area is, but it might be an area the size of France. But we'll go along with it. We'll go along with it. Anyway. All right, Eric Belanger added 2,000. All right. That's Canuck dollars. That's great. That's awesome. It's unbelievable, actually. Unbelievable. Robert Kepke. How are you, Robert? Any idea what's up with GDC? The government of the District of Columbia? All right, if I get GDC, I'm going to lose Meshuggah. That's all right. Let's see what's happening. $4.16. Yeah, I see what you mean. It had a nice run up after the holidays. It ran up to 530, but now it's sold off for 3 straight days. I don't know, but I do think that it's one of these stocks that right in the middle of December, it went from 350 during the next day all the way up to maybe $6, I can't tell, over 575. And then it came crashing down into the new year. I don't know, Robert. Looking at it, to me, that's like a miniature squeeze. It collapsed, and then the rally to 550 intraday, that was the bounce back, and that's going to be as high as it's going to be for a long time. That's to me. But that's just looking at the chart. I have no idea. I think the next stop is 350, and then $3, and then to $2. But if you want to be bullish, which I'm admitting I don't know what the fundamental story is. If you want to be bullish, you can see an uptrend that it's touching right about here. And, you're going to, and that's been going on since May. I don't trust it, Robert. When that thing went from $2 in May on the lows and then rallied in a big, almost Proctor-ish three waves up to $4 by September, and then just skyrocketed to, I don't know, intraday, not over $9. That looks like any other squeeze chart. It looks like it's getting out of control, and then it sells off, comes all the way back down to the breakout point, and then, like they always seem to, they have another attempt at a rally, which I would say is what happened in January. And that could simply be that tax loss selling ended. And it just feels like, I mean, can you call that a double top in the short run where it was up in December and then up in January and now it's broken down? I don't know. I don't see a clear technical pattern, but the thing that I think of GDC is it looks a bit like a squeeze occurred. The squeeze gave up the ghost and then did a dead cat bounce like they always do, did a rally back, and now it's going back down. But that's really amateur chart reading on my part. I don't know what the fundamental story is. I would assume Ham would know. So if you listen to his conference calls or check out his X postings, I would think that's where you'd find out about it. I mean, this GDC, I'm trying to remember all the stories all blur together. They're all got AI, they all got, gold, they all got crypto, they've all got the bunch of whales own the majority of the float or more than the float, and there's a huge short position, and it's all, the stories just blend together. It's always the basic buzzwords: whales own the float, and there's going to be a buy-in, and there's a huge short. And at some point, you got to stop listening to it. They're impossible to trade unless you're disciplined. As soon as Ham calls you, if you look at the chart and you adjudge yourself early in his phone calls, buy some. And then when it rallies, get out and leave the upside to somebody else. If you did that over and over again, you'd have a lot of winning trades. My opinion, Robert, is with Railtown, we're going to be able to turn, at least in my case, a small account into an okay sized account, maybe. And then if I want to play some of these, right now, if I play GDC with, I don't know, a few thousand shares, it'd be my account, or it'd be the majority of my account. Scary thought. Very scary thought. And if it works, great. If it doesn't work, I'm just sitting there sucking my thumb. But if Railtown works at 10, 20, 30x, I could just take a small part of that account then and play the next manipulated stock. And there will always be another manipulated stock. There'll always be another one. GDC is not the last of the so-called short squeeze stocks. But frankly, I don't know what's going on. I don't think the chart looks good. Let me look at a better chart. Let me look at a better chart. For me, anyway, better chart for me to read. I use stock charts. And I like how they, well, that's a little bit better. It's not as nightmare scary as this other one I was just looking at. But it's not pretty. It's not pretty, Robert. I mean, that chart, they rallied it up to 550. I guess in September range, it went up to 6. No, in December, sorry. In December, they got it up to 6. They brought it down in tax loss selling. And then for January, it's run up. And now they got it back down to 416. But it's broken through the 20-day and the 50-day moving averages. Next is the 200. Will the 200 hold? It did last time. And the 200 has held pretty much since May of last year. Last year, it kind of went under there for a while, quite a while. But will it hold now? I suppose you could say there's support in the $3 to $3.50 range. And then you could probably say there's support in the $2.50 range. But to me, 387 holds no magic. 387 is the moving average. It doesn't, to me, hold any magic at all, looking at that chart. But I don't know. I'll try to find something out, but I'm not sure I'm going to be able to. Ward Richardson, Jeff Bezos has other things going on with the government. It's called TerraWave. TerraWave. We'll talk about that later. Robert Kapke. I hear they're talking about a reverse split. Well, it'll be destroyed. It'll be destroyed. It'll be destroyed. That's your signal to get out. Hold your nose and get out. I mean, how many shares are out on that thing? GD Culture Group. I don't know why we keep falling for the same stuff. 2 months ago, GD Culture Group's largest shareholders are retail investors with 19% ownership. Insiders own 9%. Well, you know, retail's always right. Never been a case where retail's been wrong. And they closed a private placement of 2.8 million. I don't even want to look at it to see if it's toxic. And then 4 months ago, they did a Bitcoin acquisition deal with Palace Capital. I remember looking at that. I thought it stunk to high heaven, but hey, it's Palace Capital. So is GDC the one that's supposed to be worth $22 a share because of their Bitcoin? I guess that's the one. That's the one that Bill Miko essentially, he didn't really do it in this order, but in a week or two time frame, he essentially got out of Railtown, I think around the mid 30 cents, maybe 38 cents, but I think 34, 35 cents, something like that. Of course, that was in retrospect, that was good. But he bought GDC at like $7.80 because the headline said it was worth $22 a share or something. I think that was GDC. Anyway, let's see how many shares are outstanding. I don't think they have that many shares out. They do have cash, $225,000. I just, most of the people around here, not me, but most of the people in DC, women, mostly the women, men too, but mostly it's the women who make the money here. They make more than that per year, every year. And they're young. Anyway, so it's got 225,000 in cash. I don't see how many shares. Shares outstanding, 57 million. Why would they do a reverse split? Maybe it's a strategy to catch out the shorts or something, or I don't think it'll work, but yeah, I would just follow what Ham says because I don't know what I'm talking about. Maybe they're going to do a forward split, but I don't know why they do that. Splits are actually pretty useless. They don't do anything. Just cause accountants to have an extra week's paycheck. CJ Yukon, just curious if we own 17 million. What percentage of the company would you say we own? Well, on a fully diluted basis, I think the number is approximately 215 million shares. On a disclosed basis, I think it's around, outstanding shares. I think it's around 193, 194 million shares. So depending if you want to fully dilute it or not, I would argue you should use the lower number, because to get to the higher number of shares, it would imply exercising of options and warrants, which brings in money to the company, which isn't there right now. So depending on where the stock price is and what's done with the money, excuse me, it should be additive to the value of the company. It shouldn't ever be dilutive because it's already in those numbers. It's already accounted for and disclosed. But if you just use a rough number of 200 million, that means we have 9%, 10% of the company. That makes us a large institutional holder almost, although we're just a ragtag group. If I had asked all of you to sign something with me, or we had created a fund or something, we would be an institution. I thought that we had some leverage, and I was honored to have a conversation with Corey finally for 2 hours. But it's my opinion. And of course, everyone's going to stand up and say I'm an asshole. But I think he also had a conversation with the shorts. And so I don't know that they're serious. They really know what they're doing in terms of this risk out here. But maybe I'm the one that's wrong. But I thought I had some leverage. But look, if a guy like Tony the Tiger can trash me, make fun of the stock without doing any due diligence, and now he gets a phone call from the CEO, I don't think I have any particular leverage. Whoever's advising the CEO can't judge that Tony, whatever. I'm not going to finish the thought. I don't think I have any leverage at all with the company. Now, we as a group might have some, as long as we're, cooperative. But I don't think if we somehow became a disgruntled group of investors demanding board representation and, I don't know what else we'd ask for, audit or something, and being disruptive, I think Corey would just say, pound sand and move on. We own essentially as many shares as Corey, and Marwan owns, fully diluted, Marwan I think owns 20 million, and I think Corey owns almost 18 million. And they're going to do what's in the best interest of those shares. And they don't need our help or our interference, I don't think. I'm going to show you, once I get through these, I'm going to show you some little questions I asked. I've had a lot of time to sit and think and wait. And I noticed from about 2 weeks ago, 1 week ago, 2 weeks ago, I think it was 2 weeks ago, I did some queries and I showed them to you. I was trying to show how to risk your numbers. That's the term I use. And what I noticed in one of the first set I created the parameters, the targets. The second set, I just let the computer come up with it on comparables. And then I asked the computer, what's the probability of each of those scenarios happening? Let's just say it was baby bear, mama bear, and papa bear targets, and or hot porridge, medium porridge, and cold porridge, whatever. There's a range like that. What I noticed as I was talking to you, and I thought about the next day, and it keeps coming up in my head. When AI came up with the targets, the most probable target they came up with, at least at that time, was $15 a share. Now, it may have been colored by my questioning earlier in the series of questions, but that's what it was. But what was weird, and it makes sense actually, as the higher targets were exposed and they put probability on it. For example, let's say they had a target at $20 and they put 75% probability on it. I would call it risking it. 75%, you risk it. That's $15. If on one of the scenarios it said it was going to trade at $30, but they risked it, they put probability at 50%, that's $15. And so they had several targets which they put probabilities. Again, I use the word risking it. And it all came in around in that $15 to $18 range. That's what I remember. Low end was 15. That's why I'm trying to be conservative, use the low end. And it just sticks in my head that maybe that's kind of what we should expect in an early buyout if the computer sussed the risks and there's no bidding war. I'd be disappointed, but it's a nice rate of return. I don't know what other positive thing we could do. I don't think they take me seriously. If they're going to talk to me and talk to Tony, that means I'm just like Tony. So I don't think we're in a, that's me. But maybe one of you guys can call in and get better information. The handful of guys I've talked to all along, I don't think their information is particularly timely or accurate. And it makes sense. They don't know anything. I think the material information has been held very tightly. So I don't know. I'm open to your ideas of what we could do positively. I think you're going to find out that once institutions do start buying Railtown, I hope you don't sell your stock in a knee-jerk way, like, oh, it's up, I better get out, or because Tony says that you should be going into GameStop or some idiotic alternative. I mean, there may be situations where we need to lighten up. But I think just catching up with LangChain, you could see 20, 25, 30x on your stock. And LangChain's not going down unless, the whole capital markets come crashing to a halt, which is always possible. But LangChain's not going to have its valuation tumbling down as long as it's in the private pipeline and they're the ones promoting the story. and putting out the articles. And LangChain is gaining acceptance. It's not making any money, but the next round is likely to be up, not down on LangChain. So as long as that is a comparable, the market right now is saying Railtown is going out of business. It's going to do what GoLogic did. I don't know. I don't think that's how institutions are going to look at it. And so I think the best thing we've done as a group is we've purchased the shares. And I think it's going to be amazing, I think, when it starts changing. But I'm open to your ideas. Robert Kepke, I'm well, thank you. Good, I'm glad you are. Robert Kepke, they all quoted that Bitcoin, now nothing. Yeah, it's hypester crap. They did that with that Cohen guy at GameStop did it. But people don't put that together. It's all this urgency. Oh, it's gonna go. Robert, you've got computer cell programs on the one side, the heaviness that never ends. Never ends. Any stock. And then on the buy side, if you can get some criminal action going by the longs, which it is criminal, but I'm all for it because the regulators do F all. But you got to get somebody on the long side to pay a rogue desk a few $1 million to turn on their buy program computers to confuse the world briefly. It pings around the world and it starts showing up. But then to make it work, somebody's got to put up 20, 30, 40, $100 million in an account that those buy program computers can use in trading to seed the price movement, and they may lose money on the trades net. But then you need the key ingredient that's unpredictable, that can cause the cell computers to short out briefly, is retail buying, particularly if they can get it going around the world. And so you have the promoters, you have the charts, and the excitement. Hey, did you see this moving? Everybody gets in it. It's like COSM. It runs up, and the CEO, who was so close to Lou, and Lou said, I'm in with him. He's not going to do a deal. As soon as it's up, the CEO took $35 million roughly in a deal. We're always the suckers. We are always the suckers. Retail is the suckers. I had a friend at what's now Morgan Stanley. The office is still there. He's a great guy. He's now works up in. He went to. Anyway, you don't need to know his history, but he took an institutional job up in New York and then Connecticut, because a lot of those offices moved. I guess that's across the river. So he had on his computer, every time I'd come into an office, say hello, he had this thing cut out from the newspaper. It was a quote with his picture on it. It was a quote from Michael Milken. If you need tax losses, call a retail broker. It's about right. About right. The only person further on the back end of the knowledge information and Wall Street's games other than the retail broker is the retail client. Acquired 7,500 Bitcoin, now nothing. They have 700. Well, that's what they say they have. And I suppose it was audited. But do you think people on Wall Street would let that gap in valuation last more than a nanosecond if they truly trusted the auditors? I mean, you're talking about a Chinese company. I don't know if it's red Chinese. I guess they're still communist China, or Hong Kong, but Hong Kong is red Chinese now. I don't know. It's the other side of all this. They understand the gimmicks they're up against, and I don't know. I never trusted that Bitcoin valuation. I mean, obviously you can do the arithmetic. How much is 7,500 coins worth? But Robert, how the heck do you convince a guy with $700 million worth of Bitcoin to put it in a shell company and immediately lose 2/3 of his value unless he has an escape valve? Like he has a side letter that at any time he can ask the company to issue additional shares such that the value of his stock position is equivalent to the value of Bitcoin. But if you start doing that, then you start not knowing the denominator and it becomes a slippery slope. So I think a savvy guy or girl is not going to do that. It doesn't make sense that somebody has tied up their, let's just call it $750 million worth of Bitcoin in a vehicle that values it at 1/3 as much. It's just illogical. It's just illogical. He's got to have, and there's no assets in GDC. There's nothing. I don't know. It goes back to what I'm telling you. You've got the heaviness, which is this complex of short sellers, day traders, so-called financiers that want to steal the market cap of every stock below $5. They've paid off the regulators. They have corrupt attorneys. Congress is even paid off, and they do it with nary a fight back. And then sometimes these people, these group of whales, maybe with Univest, they come up with a way of fighting back. And if they can put all the ingredients together, they can get this huge short squeeze. But it's usually the Univest and those that are close to them that are able to get out in the squeeze. Everybody else is left. Why did I get out? Because it all happens in a heartbeat. But it's all manipulated. It's all manipulated. And if one catches fire, how many do you go through whittling your account down to nothing before the one works? I just think it's not an adult way of investing. If you want to gamble, if you can take, look, if I can make my account worth what it once was, I basically, you don't even have to know what the numbers are. If you can move your account up 10 or 20x or 25x from here in Railtown, whatever your account is right now, if you buy a position, if you split it into 4 parts, you're putting 25% into GDC, 25% into MTEN, 25% into G-Bucks, and 25% into Mashugana, or maybe 25% into Wolf, or, you know, we have a whole list, so-called diversification. Tony has 4 stocks. Railtown's one of them. The other 2, AMC and GME. And then there's one like OBPH or something. So that's so-called diversification. Put it in 4 stocks. I don't know if that's what he's recommending. I didn't tune into his call. But he listed 4 stocks. So if you, whatever your account is, if 25% of your account right now is tied up in a GDC, if instead you put all of those crappy stocks into Railtown right now, and maybe in 90 days or in 6 months the account is up 25x or 30x, 1% of the account at that time would be equivalent to 25% of your account now. And then when you're there, you can listen to him, you can listen to Benedetto, you can listen to Borders, you can listen to the next breathless guy saying, oh, my guys are in this. Oh. It's the whales are in it. Oh, yeah, yeah. And then just remember, you have to get in early. And as soon as it starts running to some number, get out. Because they're going to eventually come back to, oh, I already sold mine. You got to do your own due diligence. I'm out of it. Now I'm on to the next one. You just can't. You got to treat these stories as hot potatoes. If someone throws it to you, hold it as long as you can stand it, but then chuck it out. And I don't think Railtown's a hot potato story, but GDC, I don't know. I don't know what to say. Feels like all the rest. Yeah, that's what I think. A manipulated story. I'm not saying they won't work. I mean, look, GDC. If you listen to him in, I don't remember, 2 Decembers ago. I think it was 65 cents. That was a hell of a thing. If you bought a bit of it, it went to $8 or $9 or $12 pre-market. It's a nice trade, but you had to get out. You had to get out. And I bet a lot of people did do it that way. So as a source of trading ideas, I think Ham has some, you know. Robert Kapke. Sorry, William, had to jump off back now. Oh, back now. Okay. Robert Kapke. I've made money on everything Ham recommended, 500% on several. The difference being I sell when it's high and buy when it's low, always holding a core position in case it ever does squeeze. Well, I hope it's not a core position. I hope it's a small position. But the way you describe it, it sounds like you get in early. You know how to trade. You know how to trade. You leave the upside for other people. And yeah, I think if you traded, I didn't do it. I didn't get out of GTII. I didn't get out of Finger properly. I didn't get out of CRTD, you know. But if you got in when Ham told you and just took the money out, you're right. You can make 100, 200, 300, 500% on your money and just get the hell out. And if you trade it that way, I think you come out ahead listening to Ham's ideas. And remember, that's how Ham trades. His trading desk was rewarded for making money, not for making money over 5 years, making money over 5 minutes or maybe 5 days, but never for a year. So that's how you should. If you can learn to ebb and flow with his ideas that way, you can make money. Robert Kepke, when the story falls apart, I exit. Well, it may have fallen apart here. I don't know. I would think each of these stocks, like G-Bucks, all of them, you know all the names, they're if they can cause a squeeze in one of them, you working with Univest, working out of Hong Kong, working out of the Bahamas, whatever way they do it, if they can make one of them squeeze, they'll come around and make the others go too, maybe. So they're, like you say, maybe you hang on a little bit of the shares. I'm glad you make 500% on them. I think Railtown just getting into position with Langchain, you've got 20x, 30x ahead, and it doesn't count on squeezes or manipulation. I appreciate the input as always. I have a new Veen pen somewhere. Used to have 2 of them. This beautiful woman took my other new Veen pen. I feel like 1 share of Thales for 1 share of Railtown will be the deal. I think that's very likely. But that depends on the overall size of the deal. If let me just add that out, 215 million times 13, I don't know, tell us, that's a $3 billion deal. Yeah, I think they could do that. It's a $30 billion company. They could issue 10% and handle it. I think you're right. 1 share of Thales for 1 share of Railtown. I think people would vote on that. And I think Thales, I don't know if Thales will go to $100 a share, but I think Thales could go to, if their AI strategy is successful, it could go to, I don't know, $50, $60, $70 a share. So I think you get upside in that. Where I have trouble is if Microsoft buys Railtown. I just don't know. Microsoft has already done so well. Can it go up another 10x, 5x? I guess it could. We'll find out. A lot. Ha ha ha. I did a forward split 3-for-1 and gained 72 million shares for a public company I ran. Worked out great. Well, but you probably read the documents and didn't get into crappy deals. I can see reasons to do forward splits. Someday it'd be interesting to hear your experiences. All right, now I got to the end. I want to show you the research I did, the so-called research I did. I did it. Yeah, right. Yeah, right. Yeah, right. It wasn't me. It wasn't me. It wasn't me. It wasn't me. Oh, that's Cohen. It wasn't me. I showed you this screen. This is the conductor screen. Imagine this. Something like this is an interface to all of Teles's clients that come to this data center. That's how hard it'll be. Click, 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 or click. $80 a month, that's $1,000 a year. It's not going to be that hard to sign up. This is their offerings: RailTrax, Rail Engine, and Conductor. This RailTrax is kind of existing data, manipulating it, gathering it, searching it. Rail Engine is using that data, but absorbing real-time data like cars driving toward you, or stock prices changing every minute, or bond prices changing, or conversation, I suppose. And then Conductor kind of observes it and keeps everything in the lane and on track. Get it? Get it? AI demand alone will require $5.2 trillion in investment. We calculate that companies across the compute power value chain will need to invest $5.2 trillion into data centers by 2030 to meet worldwide demand. Now, if you're building a data center and users are going to come to your data center, you're competing with other data centers. Users are going to want to spend as little money on your data center as possible. You need efficiency, the observability tools, so there's no endless loops in the software. Look at this, we're projected 156 gigawatts by 2030. That one Tennessee deal with Elon is more than that. All right, I'm going to take that down. I'm going through these to see what I can take down. Oh, this is the listing of the CSE 25 index and rail towns on it. They update that. It certainly is good. What's this guy say? Impatience for victory guarantees defeat. The Sun King. I can take this down. Next bridge, yeah, I can take that down. All right. We already want that. The Panther. When a Panther calls, don't answer. Here's Darren Entwistle, right here. This is his quote. It's all in-house at TELUS. Whether you're talking about AI inferences, talking about AI models, talking about AI training. We believe in terms of what supports our revenue going forward, that our holistic in-house solution, aided and embedded by our partnership with NVIDIA, creates a series of superior attributes which are going to drive the revenue model from 800 million to 2 billion. The Made in Canada Sovereign AI white paper TELUS controls the entirety of the AI compute ecosystem. And that's significantly differentiated from our North American peer group. My argument is Railtown is part of that ecosystem. It's going to be sharing that 2 billion. We'll find out. We don't know it. We don't have enough information yet. We are the first North American service provider to become the official NVIDIA cloud partner, utilizing our state-of-the-art data centers to support customers and partners such as OpenAI, League, EY, Accenture, and Railtown. These network investments are powering Canada's digital sovereignty through our pioneering and leading AI infrastructure and technology. Somewhere in here, he uses that terminology that I always, maybe it's here. We're doing a modular build approach responsible CapEx. We continuously take advantage of improvements in chip technology, leveraging again our NVIDIA relationship. As the chips get better, we're not locked in on a bulk basis with the last generation. We can leverage next generation technology. Because we control the entirety of the ecosystem, if you're going from Canadian 800 million to Canadian 2 billion, what's the margin? I will tell you. The margins are A, attractive, and they're more attractive to the organizations who control the totality of the compute ecosystem from inferences, models, and all the way to training capability. That is an exceedingly attractive aspect for us. We do not have to share our economics with a myriad of partners that have to buttress our solution because of our capabilities to do it in-house, aided and embedded by TELUS Digital. There it is. This is Darren's. This might be where I got it. Sovereignty is now positioned as a key component of the commercial and regulatory Canadian environment. With demand for AI growing, telecommunications providers are in a position to benefit as enablers and operators of the infrastructure that supports digital autonomy. From Rimouski today to Kamloops tomorrow, we are creating the backbone for Canada's productivity. That's why I think when he talks 2 billion, he's talking Rimouski, he's talking Kamloops, and I think he's talking Roadhouse, Railtown. All right, let me go with all the heavy lifting of research I did today. I had to go to the library and pour through reams and reams of microfiche and search newspapers and magazines and all manner. Actually, I just used Perplexity. So let's see what I came up with. All right, 59, is that the first one? 59, 59, 59, number 9, number 9. All right, so this is a chain of consciousness. My first question, you can see what it was by the answer. AI orchestration and agentic frameworks are attracting premium valuations, with top names like LangChain now firmly in unicorn territory And that's, you know, that's a shame that they got there ahead of us. I asked Corey directly, is that a threat to us? And the main thing he pointed out after he said no is that the market's so big, there's room for many unicorns. Top names like LangChain now firmly in unicorn territory, and strategic M&A starting to put multi-billion-dollar price tags on the orchestration layer itself. I believe that's Railtown, orchestration layer, conductor. Early stage rounds, so just read that again. Strategic merger and acquisitions are starting to put multi-billion-dollar price tags on the orchestration layer itself. Early stage rounds in this segment are priced well above traditional software as a service benchmarks, and they're riding the broader AI funding wave. So here's the headline benchmarks. LangChain Series B, 2025. LangChain raised about 100 to 125 million at roughly 1.1 to 1.25 billion dollar valuation as an open source agent / orchestration framework for building large language model applications. Total funding to date for LangChain's 135 million across seed round, Series A round, and Series B round. Reinforcing infrastructure / orchestration as a quote unquote core AI stack category. Meta, Manus AI deal. Meta, formerly known to the world as Facebook, Meta acquired Manus, a general purpose AI agent / orchestration startup, for an estimated 2 to 3 billion. Let me just give you, I mean, you know the midpoint of that. It's $10, $11 a share in Railtown. Explicitly framed as buying the agentic orchestration layer rather than just models. This is the heart of Railtown. So now we know two competitors, LangChain and Manus. LangChain in the summer was valued at $1.25 billion. Manus at, call it $2.5 billion. I think LangChain's probably valued at $2.5 billion now. Funding environment for AI orchestration. Across AI more broadly, seed and Series A valuations sit at a marked premium. Seed rounds in AI show 40% and higher valuations as compared to non-AI, with median Series A valuations exceeding 50 million. So if you use that valuation, we're either buying at a seed round value or an Series A round valuation in Railtown. Series B medians are around 140 million, and it all depends on the high growth AI infrastructure plays. And they can move into 9-figure market caps, especially those as seen as platform or orchestration layers. That, my friends, almost identically describes what I understand Railtown is. But we don't know it 100%. AI captured 1/3 of all venture capital money 2 years ago. And through this year, it's increased. Orchestration agentic startups are now showing up in, quote, best AI orchestration startup, unquote, lists, with LangChain consistently near the top and a long tail of sub $100 million valuation players still at seed and Series A round valuations. The Manus acquisition signals that hyperscalers and consumer platforms are ready to pay multi-billion-dollar valuations, which multi-billion, you're already at $10 a share. $2.1 billion, $2.2 billion, you're at $10 a share for Railtown. Multi-billion-dollar valuations for control planes that sit above models and connect to apps, which is a direct comp class for many orchestration frameworks. So relative to LangChain's unicorn prices and Manus's $2 to $3 billion sale, orchestration frameworks with one, strong open source traction or ecosystem pull. Well, I don't know about open source. I think that applies, but the ecosystem couldn't be better up there in sovereign Canada land. Two, credible enterprise adoption. Well, they're saying LangChain is being adopted in Fortune 500 companies, but Railtown is, as soon as TELUS pumps up the volume on that data center, Railtown is going to get tens of thousands, hundreds of thousands of users essentially in a matter of days, weeks, months, and that's going to be credible enterprise adoption, in my opinion. And then three, the final point, is it assumes a clear, quote unquote, control layer positioning over models and tools. And that's where I think Railtown is. So if you have this clear control layer positioning, the values are plausibly in low to mid hundreds of millions at 20 to 30 million annual recurring revenue, and can stretch into multi-billion-dollar valuations once they cross the 50 million ARR a year to 100 million annual recurring revenue per year, as long as it comes with high growth. This aligns with the LangChain's trajectory. Scaled back for ecosystem size. I don't know what that means. I don't know what they mean by that. So then they told me, you can do the next step. I said, yes, please do the next step. I was doing such hard work. So orchestration frameworks, funding, and valuation snapshot. Railtown, the role in the AI stack. Railtown is a developer productivity / agent general intelligence conductor orchestration for software during the life cycle and whatever the hell CI/CD is. The latest round status is that it's a microcap and getting microer. Funding size, there hasn't been. Approximate valuation, they say approximately 50 million US. So they project that it's likely less than 5 million in annual recurring revenue right now. I would say it's less than 500,000. LangChain, open source agent, orchestration framework for large language model apps. They did they closed or announced a Series B It was priced over the summer. In October of 2025, I guess technically it would be priced as it closed, but they raised money over the summer. The funding size, 100 to 125 million. The valuation post money, $1.25 billion. Common estimates still put the revenue, the monetized revenue, is still low to mid 8 figures. So it's low tens of millions. Low tens of millions. And I think that's where you can expect Railtown to jump to, is low tens of millions as soon as business starts running through the TELUS data center. And then there's Valium AI, Enterprise AI Workflow Orchestration, evals, Deployment Control Panel. They did a Series A in July. They did $20 million. They didn't disclose the value, but they infer that it might be up to 150 million. But likely they're only doing low single-digit millions in annual recurring revenue. And these, I had to scroll over. So Railtown has an implied multiple versus ARR. This is the headline at the top of the chart. So Railtown is very high, 10 to 20x, but it's not really disclosed, they're saying. And then LangChain, roughly 30 to 50x on monetized revenue. So that might be the multiple. And then down here on Valium, on generic AI infra medians, 15 to 30x. Then there's one more company, Breeze AI, no-code voice orchestration, which Railtown has. Pre-seed, $1.3 million. Pre-revenue, minimal. No, not meaningful in revenue yet. So this table anchors a public microcap orchestration player, Railtown. And the leading open source framework unicorn, LangChain, and a backed enterprise orchestration control plane, Valium, plus a very early orchestration company, Breeze. So anyway, they go through how they did the model, but we don't have to get buried in that because we're moving on. So here is a Railtown specific scenario matrix using the AI infra orchestration multiples implied by LangChain style deals and broader AI software as a solution benchmarks. So your conservative band is 8 to 15 times annual recurring revenue. Good SaaS with AI rather than any sort of breakout technology. Your AI infra / orchestration band, 15 to 25x, aligned with better deals, better technology. And then your outliers, LangChain, which I think Railtown's going to be there. But for now, we cannot deny that LangChain beat the band to the head of the line. Top tier orchestration, which is where I think Railtown is. LangChain style band, 25 to 35. That requires strong growth, the ecosystem has to pull it. And I think the Thales data center does that, and very strong intellectual property. So you use these scenarios. Now they asked me. So I said, assume in 2026 that Railtown does 25 million, exits this year basically, doing 25 million in annual recurring revenue. In 2027, it does 100 million. And in 2028, it does 250 million. So they came up with the conservative numbers in the middle of the page, and they did it that's this top line here. Good. So you go from right now, or sometime in 26, it might be worth $2 a share, to next year being worth $4 to $8 a share, and then in 28 being worth 10 to, I don't know what that is, $18 a share. But here, that's the conservative level. On the orchestration level, it's much better. You can see it here. It goes all the way to 3 to 6 billion. On the top tier level, it starts now probably in the $4 to $5 range. And then as next year's numbers come to picture, that's 10 to 15, $18. And then as the following year, much bigger numbers. 6 to $8 billion in enterprise valuation. All right, we'll plow forward. So how does this line up with LangChain and Vellum? LangChain at 1.1 billion on the low, tens of millions revenue, implies 30x effective multiples. Sitting in the top tier orchestration column and showing 25 to 35x is realistic as a multiple against ARR for a category leader. Vellum's 20 million Series A fits 15 to 25x. And, that's more of a startup. So interpreting this for Railtown, and they said at my 25 million annual recurring revenue for 2026 case, simply being treated like it's okay, it's good AI software, already supports a few hundred million valuation. Well, a few hundred million is probably $2 or $3 a share. If Railtown earned a true orchestration narrative, would push it into the mid hundreds of millions. So I guess a few is 100, 200, 300 million. Mid is probably 400, 500, 600, maybe 700 millions. And by 27, 28, the difference between the middle and right columns is essentially solid niche infrastructure versus recognized orchestration leader, which is that recognized orchestration leader is where LangChain style comps sit, and where hyperscaler strategic acquirers interest tends to show up. And I think Railtown's there, but we have to find out. And then they said, do you want another refinement? And I said, yes, please. So they went further. Using your ARR path for Railtown, the table below overlies probability weighted outcomes, risked outcomes across the 3 multiple bands. Assumptions for the probabilities. I didn't make these up. The Perplexity did. Premium AI infra and orchestration deals can reach 25 to 35 times annual recurring revenue, but only if there's a clear differentiation from the competition. There's ecosystem pull. I would say Canada and the TELUS Sovereign AI Factory does that. And strong unit economics. They're going to have close to 100% margin. That without putting up any more money. I'd say that's strong unit economics. That's the premium AI multiple. The middle band, 15 to 25x, becomes the center of gravity once growth is proven. But category leadership is still unknown. Base 8 to 15x is having Railtown treated more like kind of a good software company rather than a must-own orchestration control plane. I think Railtown's going to be a must-own orchestration control plane. And you could ask, well, if LangChain is already the leader here, and this other one, Manus or whatever it is, has already been bought, is there going to be demand for Railtown? And I think there will be. It's a huge market. All right, let's go through it. For 26, the three scenarios, in each case, they do 25 million in ARR, but in the base scenario, a good software company. You have a valuation range at its midpoint of 287 million. It's a dollar, I don't know, $1.40 a share. At the orchestration valuation, and the probability is only at 35% at this point, you have a midpoint of 500 million. And top tier, 25 to 35, 15%, you have a midpoint of 750 million. And, it all right now comes out probably in the I don't know, I'm trying to do it in my head, the $1.50 range, $1 to $1.50 range, if they're doing 25 million a year. Now we go on to the 2020 700 million ARR. Well, then your midpoint is 1.15 billion on the low end, 2 billion on the orchestration level, and now I have to go get the rest of it. Yeah. So the top three are this year doing 25 million, which I think's low. Next year doing 100 million. So the base case here is base case right here is median 1.15 billion. Orchestration 2 billion, and top tier 3 billion. And then in 2028, if they do 250 million in ARR, base midpoint is 2.8 billion. Midpoint for orchestration is 5 billion in valuation. And the top tier midpoint is 7.5 billion. Well, if you think like I do, you're eventually going to ask, well, what's that worth today? And I eventually get there. So they do the probability weightings. In 26, 430 million in value. In 27, enterprise value of basically 2 billion. And in 28, 5 billion. All right, so let's move on from that. Using the 2028 annual recurring revenue of 250 million and the earlier multiple bands, that's what I asked. What would happen if somebody bought it today based on those numbers? A strategic buyer today or within 6 months, which is what I asked, would normally look through this year, next year, to that end point of 2028, apply a discount to reflect execution risk and for time, and then apply a further take private buyout discount. So your valuation anchors from 2028 base, they give this spread, 2 billion to 4 billion almost. Orchestration band, 4 billion almost to 6 billion. Top tier, 6 billion to almost 9 billion. Probability weight of all of that, they come up with 5.2 billion. Fair value, 2028. For a buyout today, next 6 months, modeling this 5.2 billion for buyout modeling, this 5.2 billion is the central long-term quote unquote public market / strategic value if Railtown actually delivers in 2028. Discounting back to a 2026 takeout now or within 6 months. Assume a buyer wants a 20 to 25% IRR from 26 to 28, those 2 years. At a 20% IRR, they give you a formula which works out to 0.694. At 25% IRR, works out to 0.64, this formula. Apply both of these to the 5.25 2028 fair value. At a 20% discount, you get 3.6 billion today's value. And at a 25% discount IRR calculation, today or the next 6 months, you get a value of 3.3 billion. So a rational strategic buyer could view 3.3 to 3.6 billion as the maximum justified 2026 enterprise value if it believes that the 2028 numbers are going to materialize. So a buyout offer level versus the current micro cap price. Railtown's current public equity is around $50 million market cap. if they're ignoring cash and debt. I don't think there's much cash or much debt. A strategic acquirer rarely pays the full discounted enterprise value. They always factor in a risk discount. In other words, maybe they don't hit 250 million in ARR in 2028. One way of confirming that is if the ARR ramps quickly, almost like a reverse ski slope starting in, let's say, March. But anyway, they might put a risk discount. They might also negotiate a discount if they're the only buyer. So one way to reflect this discount is to haircut it. So pay 50 to 70% of the perfect execution and use cash flow as your model, but discount it. So 50% gives you 1.65 to 1.8 billion. 70% gives you 2.3 to 2.5. When I talk to you, I say risk it, but they're just using, it's just probabilities. So a plausible buyout range, if you anchor on the idea that in 2028, Railtown could, I think will be, doing 250 million in annual recurring revenue, a low buyout now, relatively now, the first half of 26, 1.5 billion. Mid buyout case, 2 billion. High buyout case, 2.5 billion. Relative to a $50 million current market cap, even the low case number implies a 30x premium on today's price. If someone believes this course of revenue growth. What would a bidding war do? I asked that question. If multiple strategics and or financial sponsors believe the 2028 path is credible, the key dynamics, the floor, the first bidder might anchor near the low to mid buyout band, 1.5 billion, 2 billion. That alone, all by itself, already reflects a massive premium to the current microcap level. Escalation mechanism. Each competing bidder reassesses if fair 28 value is 5.2, then paying 2.5 or even 3 billion is worthwhile, particularly if it's growing at a rapid rate. As long as there are at least two buyers, how many times have I said that to you? And they both are willing to accept lower IRRs, the ceiling moves closer to the full discounted value. So at a 15% IRR with a discount factor, I guess at 75.6, it implies 3.9 billion as a potential takeout in the first half of this year. So in a hot bidding war, clearing prices could push toward $3 to $3.5 billion based on this projection. Now, and that's why I think the buying offers will come quickly, because initially it's going to be defensible to say, well, 25 and 26, 127, 250 and 28. But if they wait, those numbers might go up quite a bit. It could be 126, 227, 400 and 528. All right, if it's a strategic buyer versus a financial buyer, this is the difference in their behavior. A strategic who sees Railtown as critical as an orchestration control plane for its own AI stack. I reason that that applies to Microsoft, that might apply to AWS, might apply to NVIDIA, might apply to TELUS as a start. So a strategic can justify paying above the pure financial calculation, the purely financial discounted cash flow, because it also captures, if they pay more, they get the product acceleration, time to market, so they don't have to build it themselves. And they have the defensive value, keeping it away from the Americans or from, Oracle. That can add another premium. And these premiums are all just guesstimates. Putting it together under a genuine bidding war where two or more well-capitalized strategics buy into the 2028 a realistic clearing band of 2.5 to 3.5 billion could happen now, the next 6 months. An extreme upside case. One buyer sees this as a, quote, must-own LangChain style orchestration. I think LangChain should be saying they have a Railtown style orchestration, but we missed that boat. So if they see it as a must-have plus scarcity, a $3.5 to $4 billion takeout is not impossible, the range. They'd have to be comfortable with mid-teens. But what would do that is if they saw growth. And if they think that Railtown will be a top tier. What this implies for you as an investor, if you frame this in investor terms, from a $50 million enterprise value today, if you have a quiet, single bidder deal at 1.5 to 2 billion, that represents a 30 to 40x gross multiple from here. I've been honking that honker for months. A competitive process where it comes in a range of 2.5 billion to 3.5 billion represents a 50 to 70x multiple from here. Now these outcomes are colored by Railtown being seen as having a credible path to 250 million in annual recurring revenues by 2028. By the way, I see the risk here that number becomes visible in 12 to 18 months or sooner. All right, and then the next point, it's conditional on the market continuing to value orchestration and agentic control planes in the 15 to 35x range in the out years. That's basically, are enough people going to still need these, or is LangChain going to control the whole market and Railtown withers on the vine? And then the third thing, at least two serious buyers needing this capability more quickly than they can build it. And I think that a Microsoft or a TELUS or a NVIDIA, they could probably build it very quickly, but they've got so much in this race, it's easier just to buy. By the way, the market's so big, I think, and I think Railtown's unique position as the layer between the user and the data center, it might define it as the trailblazer, not LangChain. If you want, the next refinement is to assign, okay, let's go on to the next probabilities. See how much work I did? Using your earlier numbers and logic, the buyout option value can be framed with explicit probabilities. No deal, straightforward single bidder, and a competitive bidding war. This is necessarily illustrative, not predictive. So you're going to define the outcome buckets within 6 months. Assumes 3 mutually exclusive outcomes. No deal. Railtown remains a miniature unicorn. Single bidder deal. One buyer buys the company, which means no bidding war. Bidding war, 2 or more credible buyers compete. From your prior setup, which is based on 250 million in annual recurring revenues in 2028, with a probability weight valuation they came up with 5.2 billion. A low to mid buyout band single buyer would be 1.5 billion to 2 billion. A high band bidding war would be 2.5 billion to 3 billion, and maybe higher. So you put in probabilities. For an early stage micro cap today, a strategic deal is possible, but far from guaranteed. And I think we have to accept that. One reasonable but conservative set of probabilities: no deal, 60%. Single bidder deal, 25%. Bidding war, 15%. I didn't go to the higher numbers you're going to see. I like the conservative for now. These reflect that many good assets never get taken out at all. And that always might happen. We don't know. So expected buyout valuation, and they risk it. A single bidder midpoint, 1.75 billion. Bidding war midpoint, 3 billion. They give you their formula. So if a deal occurs, they go through here and just strike out the no deal value. Anyway, they come down here. If a deal occurs, the expected clearing price possibly of 2.2 billion kind of now is reasonable. I mean, we don't know. We're coming up with a bunch of numbers that we just don't know. So if you combine the value with probability and size, relative to today's $50 million market cap, the expected value of a buyout option alone, what they're talking about is you own the company, but you also kind of own a buyout option, like a call option. So they're valuating that at roughly $1 billion. That alone is an 18x multiple to the current cap. And that could be the expected takeover value. If a bidding war comes in, they try to factor in a value caused by the bidding war. I'm going to skip it because I think it's meaningless. So how to use this as an investor? These are words that Tony would use: position sizing and risk management. Go ahead and use those words, but you're all adults. You know how to do it. Think of your Railtown stake as number one, a foundational bet on the standalone enterprise value. Low end now 430 million, 5.2 billion in 2 years. That's your standalone. Plus a call option on someone buying out the company or a bidding war to buy out the company. A call option on either of those takeout scenarios. And the more you believe in it, Railtown will be perceived as a technology which is different than the pack and is a differentiated orchestration control plane. And multiple big cap buyers need that layer rather than thinking it's nice to have. The more weight you can move from no deal into single bidder and bidding war, that'll drive up the buyout value. If you share your own subjective probabilities, the numbers can be rerun. I didn't do it. I didn't do that. I just left it conservative. Let's see what else is here. So they did it. I didn't. They gave me an example using the same structure, but you increase the odds of the takeouts. A single bidder midpoint 1.75 billion, a bidding war midpoint of 3 billion. So then they try to get a value to that call option, which they put here. They give you credit for a single bidder or for a bidding war. So the unconditional expected buyout value, 1.36 billion. This is the expected value of the takeout option alone, ignoring your fundamental value as if the company just stood alone for the next 2 or 3 years. This is trying to give you some optionality on the call option. It's pretty clever, actually. So if a deal happens under your bullish probabilities, the clearing price might be 2.3 billion. The unconditional buyout of 1.3 is 27x the current market cap. Conditional on a deal, a takeout at 2.3 is 46x of the current market cap. Under bullish assumptions, another way of saying this, if one believes that the annual recurring revenue 2 years from now will be $250 million. And there's a likelihood of a buyout. A large share of Railtown's potential value to an investor today comes from the optionality of a high price takeout, not just the standalone, and I'd have to say potential because we don't know the cash flows now, but the standalone potential discounted cash flow style path. And then they're going to talk about the tail of a bidding war. Let's see what it says. They revise all that. We don't have to go through each number. Roughly half the expected buyout value now comes from the 25% chance of a bidding war. So, the more optimistic you are of a bidding war, you can value this optionality a little bit higher or significantly higher. So how do you use this? Treat your Railtown position as a blend of your core thesis, which is reaching a high annual recurring revenue and being valued, I'll just go with a big number, 25x as a standalone public company, with an embedded call option, a 60% chance, that's bullish, of a buyout, and a 25% chance of a bidding war, where the closing price, clearing price, settles around $3 billion. So if you move the ratios up to more bullish, this raises the expected buyout value significantly. And it increases how much of your thesis depends on the auction dynamic, not just one buyer. So how do you use this? You treat your Railtown position as a blend of your core thesis and the embedded option, 60%. And I think we went over that enough. All right, so I said do it per share. They estimated 100 to 120 million basic shares. I said that's wrong, so we're going to ignore that because that's not the right number. So then I told them there's 215 million approximately fully diluted shares. If you assume 215 million, the per share figures, the expected buyout value per share, the unconditional expected buyout of 1.36, it works out to $6.33 per share. That's the probability weighted average. And you see the probabilities they assign here. And then a conditional valuation. In other words, you're expecting a value, you're putting in the buyout in your current valuation. You're putting in the strong belief a buyout's going to occur. So the conditional takeout, the value is $10.50 a share. $10.50 a share. I'm starting to think that's might be it. So it's conditional on a deal occurring. They use these probabilities. You can see them right here. 1056. The expected value of the M&A option, unconditional, you're not counting on the buyout, is $6.30 a share. If a deal actually materializes, the typical clearing price under your bullish assumptions centers around $10.50 per share. Comparing those numbers to the current sub $1 trading level highlights how much of the upside in this framework comes from low probability, high payoff buyout. That's a good point. In other words, this conditional on a takeout, I think it's high probability, but there's no evidence of that. That's just belief. So they're saying a lot of the upside comes from a low probability, high payoff buyout and bidding war scenarios rather than the current microcap valuation. And you can see this up here. They give a 35% chance of one bidder, 25% chance of a bidding war. I think those are very low. But I told you I did not give higher numbers to the computer. I just wanted it to be conservative. I didn't want to inflate it. Because it's all unknowable, really. Then I asked, well, is there a scenario where $15 is possible? And they said yes. But it sits in the higher end of the bidding war, top tier orchestration outcome. So I think, although it's not in this calculation, I think the odds of a bidding war are very high. And I think being classified as a top tier orchestration company, the odds of that are very high. So that's a $3.2 billion valuation. And that lines up with the upper half of the bidding war band, 2.5 to 3.5 billion, which was anchored on Railtown being seen as having a credible path to 250 million in annual recurring revenues in 2028, which is exactly what I think it's going to be higher than that. And being valued in the 25 to 35x range for top tier orchestration. And I believe that as well. For a $15 plus valuation deal to clear, $15 a share, several things need to be true at the same time. Number one, Railtown must be perceived as a must-own orchestration/control plane, not just a good software company, so that buyers are comfortable underwriting 20 to 30x on the ARR out year numbers. Secondly, at least two serious strategics or large financial sponsors bid. So one is willing to relax IRR targets and pay closer to the full discounted value implied by 5.2 billion valuation in 2028. And then three, the execution risk. In other words, is it believable 250 million in 28? Will customers accept it? And hopefully it's not just one customer. The churn and the margins. I mean, the margins are, I think, going to be 100%. I don't think there's going to be a lot of churn, but in every season, there is a churn. So execution risk. So under the modeling you've been using, yes, $15 is within the modeled range, essentially the upper half of a competitive something, top tier orchestration outcome. And do you see that word there, the execution risk? It's got to be defensible to their investment committees. That's going to happen. So yes, $15 is within the modeled range, essentially the upper half of a competitive auction / top tier orchestration outcome. It is not the median outcome. It corresponds to the higher end of the bidding war band and assumes Railtown will be treated more like a Lang chain style category asset than just a generic name. And I think that's all I had for you. Let me look. Yep, that's it. That is it. That is it. Let me have a sip of a cuppa. 6:30. All right, we already talked about that. Tell us 1 share for 1 share Railtown. Oh, it's $18 Canuck. Yeah, but it's 75% of that. It's around 13, I think. 1840 times 0.75. Yeah, 1380. Let's keep the faith, hold the line, and don't give up. I agree with you, Neil. Robert, I love talking with you because we both get it. You know, I sometimes, sometimes I get it right between the eyes. And receive 43,000 shares, 43 million shares. Wow, you got that many from your public company? It's funny and frustrating as hell. I'm sophisticated, so I don't get hurt. Well, I sometimes think I'm sophisticated and I still get hurt. The key thing is you have, which when I'm managing other people's money, I have it when I'm dealing with other people's money. When it's my own, I'm not as good. But I used to be really strict with clients. This is our strategy. And it took me probably 2 or 3 years in the business before I realized that's not churning. You know, if you're onto something where your recommendations are experiencing, back then for us 20% was great. Now everybody wants 100%, 200%, 500%. It's a different stage in the financialization of the market. But I would tell people, look, when we're up, we're going to take that. And I won't charge you commission to get out, but I usually, I earned or charged commission to get in, or vice versa. But I wasn't doing the trading to make commission every time. I wanted people to make money, but I used to tell them, we got to give a reason to the other buyer to buy it, and then won't watch it. And I can remember different trades. I don't really want to go back through them all because it'll take a while to reconstruct in my head. But there are plenty of times that the stocks just kept going up. Or there are a lot of times where they gave up the ghost and they corrected and you didn't get a chance to make it back. So people started understanding what I was saying. And I tried like heck never to lose, never to let it break down. It's tough. It's discipline. And when it's not your money, you can tell people to do it. And somehow you're thinking more clearly. When it's your own money, sometimes you're not so sophisticated. But that's what's good, Robert, that you know how to do that. I think, particularly Ham, I don't know about the other guys, but I think because Ham works so hard, makes so many calls, but he also gets tuned into, some ideas and groups of people that are motivated to make an idea work. I think if you get in early, sometimes you have to wait. But the key thing is, and I think you're right, you've got a range in mind using, I think it was GDC, from 60 cents. It goes to $3, $6, you're out. You made 10x. It's pretty nice. But it went to 12 3 weeks later. Well, you don't get upset about that. You leave that on the table. And then eventually it corrects and you feel good about what you did. But it's so hard to fight in the moment those emotions. I'm not always good at that for my own account. But I'm all right. I'm all right. For example, that story I always tell about going down to the SEC for that movie interview. If I'd been just sitting at home, my finger motion trade would not have blown up. I would have lost money on it, but I probably would have lost, 20%. Because I would just say, well, you got to do it. Bump, bump. And it hurts. But at least you walk away with enough of your equity to play again. And when I say play, it is strategic. It is sometimes investing. If it's trading, it's probabilities. But if, like you say, if you're sophisticated and you can try to fight emotions when it's your own money, you can get through this all right. With Ham, what's amazing is there's always another idea. So if you miss one, you'll have the other one. Put 75% in yielding stocks and trade the rest. Well, you don't have to trade. I don't think that everybody by nature loves trading. I don't think that. But yes, I'll give you an example. If let me just come up with a number here. I probably won't see a total. I'm seeing some big totals. I'd rather use a smaller total. Okay. I think if I wrote it down correctly, I think Michael Lonsky has 40,000 shares. So, Robert, to me, 40,000 shares. If, let's say it goes to, in a buyout, $15, which would disappoint me. That would disappoint me. But that's $600,000. So if TELUS were to buy out Railtown with their stock, it's pretty simple. You just leave it there. You don't pay taxes, and you get an 8% yield, although that could change by the time it happens. So you're getting $48,000 a year on an investment which cost you, you started with 40,000 shares. I don't know what, maybe cost 16 grand. I don't know. But if Telus were to buy it at 15, you're getting 8% on that. You're making 48,000 a year. You're going to bring in $4 grand a month. It's not bad. Of course, with Microsoft, if they bought it, the dividend is puny. But with Microsoft, it would depend where we are in the cycle of it all. But I think you could develop a strategy. I mean, the way I would do it, other people have different methods. But you could develop a strategy of selling the near month or the near week calls against your position and try to keep it high enough and short enough that you don't get called, you don't get your stock called away. Of course, if you're in a retirement account, it doesn't matter. Your stock's called away, you can rebuy it. But you can start bringing in premium from selling call options rather than buying them. 95% of call options expire worthless. Why don't you sell them? They'll expire worthless. Covered. That's one way to do it. But yeah, I agree. Right now, Michael's position, I don't know his account, but his position is worth 10 grand, right? If his position were to go, instead of 15, you might think that's too high. I think it's low. Maybe it just goes to $10. Well, that becomes a $400,000 position. If it's Telus stock, it's 8%. It's 32 grand a year. That's more than, it's 3 times what it's worth today, coming every year. On the other hand, if Microsoft buys it, I think it's like 70.75 dividend. It's not very much. I'm not going to look it up. You can look it up. So it's less exciting. But yeah, I think that's a very appealing thing about Railtown, which we'll know more as it goes along. But to have the account go up 10, 20x, potentially 25x, and that it might still have another 5x in it from there. You suddenly have a platform, just like you say, to generate income from. And I think that's very exciting. Of course, there's no evidence of it yet, is there? RDC, I did very well on GDC, sold all at the top, bought back and sold again. Bastard. I didn't do that well in GDC, although I think on my last trade, the one in June, I think I sold the stock at, maybe it's G-Bucks. They all blend together. But I made some money, but I didn't make the money you're talking about. I even made money, Robert says, on the C-turd CRTD. The CEO was full of shit. I think the CEO was in on it with Jeff Easton. These guys, they have layers of attorneys that can convince them they're doing no wrong. And I don't think Jeremy was smart enough to see that Jeff Easton was in it with his hedge funds, or Jeremy was in on it. Ward Richardson, Neil, Power Strong Rail Engine, Robert Kepke. I used to sell Nuveen tax-exempt funds. If they were Texas funds, I'd sell Texans. If in New York funds, I'd sell New Yorkers. Exactly. Exactly. Ward Richardson. William, I will have a lot of free time next week because of the storm coming. I thought maybe we could exchange numbers and talk about some AI stocks that I'd like to bring to your attention. Sounds good. I don't want to put my number out over the internet, but some of those guys have it. I know anyway. I don't know how they got it. I think it's because I gave it to Double D, but I don't know. Who knows? Ward Richardson, William, great research. Once we get some numbers on RT, then we can reevaluate. Well, that's exactly right. I think, Ward, what's going to come out, my premise, one of my premises is that the surprises, all of the surprises from here are going to be to the upside. All we've experienced since I came up with this brilliant idea in June, all we've experienced is just the dull daily pain of this campaign by, it seems like, everybody on Wall Street to destroy the market caps of these junior companies. And we haven't seen the relief of buying come in yet. And I can understand why some people just think the buying's not going to come and that Lang Chain has beaten us. I don't believe Lang Chain has a better product than Railtown. I am disappointed that Railtown didn't get out first. But I can understand two concepts, which I might be wrong on, by the way. Number one, maybe Railtown didn't want to blab about it because maybe the deal with TELUS wasn't finalized. So you keep your lips shut until that deal is signed. And then two, I think Rail Engine just is going to take till the end of January. So I think what the guys and girls at the private equity funds did was they latched on to Lang Chain and that, I forget Harrison, I forget the guy's, Chase, the CEO. He had an idea, put this data in chains and you can take the link and then create a chain. And it was a good idea. Wish I thought of it. But I'm not sure it was ready for prime time when the private guys came, girls came. But they bring so much money that they can take the idea, write it on some whiteboards, go to work without a tie and talk to each other and draw it up and put it in a paper, get their funding, and then they hire the engineers. And I think that's the path that Lang Chain has taken. Let's talk about how great we are, and then we can fill it in later. But they obviously have something because people are using it. Anyway, it's a little bit of fake it until you make it, but it's also make it so you can fake it. There's promotional there to raise money. You raise money, you hire the engineers, you fill in what you promised you said you could do. It's all in a white paper, I'm sure, or a business plan, but it's at any given one point in time, I'm not sure that LangChain was ready to do what they were saying they could do. Maybe. That's my theory. I think Railtown was ready and outperforms LangChain, but they have this huge opportunity in Canada called TELUS, and maybe Bell Canada, and maybe Rogers Communications, and that delayed it. The other thing that delayed it, maybe it was AIP, but I got used. You remember, I used to get so upset. I'm not sure that it mattered at the end of the day. We can prove that now. AIP's been closed for 2 months, and that hasn't changed anything. But the other thing is, I'm just not sure Rail Engine was quite ready. Everything else was. And I think if they had been in the private equity channel, their private equity sponsor would be telling the world back in August, well, they'd be on vacation, maybe back in September, that Rail Engine's ready to work, and they go raise $100 million at $2 billion, and then give the money to make sure it was working by January. But instead, I think Railtown is in a position where they actually have to build it out before they can say that it's ready to go. I don't think it's a matter of lying or anything. It's just marketing, and it's putting a lot of balls in the air to raise money, to impress investors, to attract other portfolio clients, companies, to be able to go get the engineers. It's a juggling act for a while. Pleasant. I used to live on such a quiet street. Oh well. But anyway, Ward, getting back to your point, you're exactly right. When I make all these numbers, and that was my goal this morning when I did that, or maybe it was this afternoon, when I did those queries. And I think I was talking to Justin when I said it before, but you can sit down with a pad of paper. Now you can do it with Google, and you can put in your parameters. Well, I use Perplexity. You can put in your parameters. You can risk your numbers, and you can come up with prices. I mean, I've shown everybody here over and over again that I mean, I have not, and this is what Ward's talking about. We don't have the numbers. We know that the CEO of TELUS said that they're going to do $2 billion in this AI revenue space. Well, personally, I think that's all about their data centers. And personally, I think that means every bit of that revenue is going to touch Railtown on the way in to the data center and the way out, which means I think Railtown's going to get a piece of all of that $2 billion by then. But I have to admit, one, I don't know who else will be in that stack. Two, I don't know that all that revenue is going to come from the data centers. So I used 1 billion. Is that too much? Too little? I don't know. Don't know. It's half of what he said, 50%. But I also used it because it's easy arithmetic in my head. At 20%, that's 200 million to Railtown, year in, year out. And then the AI partners, I mean, I think year in, year out from the AI partners, eventually they could be doing 50 to 100 million in annual revenues. But I used, like 20 million a year, 30 million a year. And it works out. If you take those two numbers divided by the number of shares, it's $1 a share in annual recurring revenue in 2 years, forward 12 months. What multiple do you put on that? 25x? It's $25 stock. 50x? $50 stock. Or do you go the other way? You're skeptical about it, so you only put a 10x multiple, that's $10. Or instead of doing that, you leave the multiples alone and you change the number. You say, well, I don't really believe those are too high. I'm more comfortable assuming 25 cents a share in 100% margin in 2 years. Well, that changes everything. But you might leave the multiples high at 50x, 75x, 100x. So anyway, we just don't know yet. And I think that's what Ward is talking about. As this goes along, particularly if a research analyst comes out with a report, we will know something better. And then you start refining your numbers. One other way I've risked my numbers is I just ignore revenue from all other sources. Now, that may not matter that much. Maybe there won't be revenue from other sources. But I don't assume anything in the roll-up of the companies. I don't assume anything for the cross-selling or the Uniserve or their foreign contract, their foreign partnerships, the one in the Middle East. I just assume zero for everything else. That's another way of risking it. So I actually like my $1 a share number in, let's say, 2028, maybe 2029. But what if it ramps up more quickly? Just what if it ramps up more quickly? And yes, LangChain's lead is, I guess, gigantic right now. But if Railtown proves its utility and its concept on one data center, and that word gets around, I would imagine there'll be more than one hyperscaler that says, I want that, or I want to make sure that Elon Musk doesn't have it. And that's where it could get fun. The difficult thing is, I personally think the company will go for sale. Not that they're going to solicit that. I think buyers will come to their door early, which means we might get a lower valuation. Remember that guy, Harbison, Mr. Harbison, Jason? He gave those Google numbers I showed you. I don't remember any of them. But Google paid, I don't know, $1 billion for Instagram, and it's worth 400 billion or whatever the hell. That might be what happens here. So these higher numbers that I have fun projecting, because, for example, if IBM paid 13 billion for Confluent or whatever the hell, 13 billion. Well, if Microsoft paid 13 billion for Railtown, I'm not saying they will, but if they did, IBM just bought this other company for 13 billion. Is it apples and oranges? I don't know. Using 215 million shares fully diluted, that's $60 a share. Something to dream about. I'd love that to happen in the buyout rather than we have to be inside. That's what I'm trying to say. Microsoft could come buy Railtown for $1 billion. And then inside of Microsoft, the valuation of Railtown could grow to 20 billion and on its way upward. I would much rather that Microsoft paid us that, a good part of it up front, but we all we can do is wait. I'm glad you're busy, Silver Skyrocket. I'm glad you're busy. It's good. It's better than not being busy. Yeah, I can send you my email. I just can't do it till I sign off, and then I can. All right. What else did I want to tell you guys? I can't believe that Mackenzie Gore is going to the Rangers. I would have thought he'd go to the Dodgers or something. But that's how it goes. Nationals designate Riley Adams for assignment. Unbelievable. We got 5 prospects. It's pretty good. Novak Djokovic has 399 wins at Grand Slams. His next win, he'll be 400. And remember, he missed out on, he was going to get, who was that guy he was playing? The guy he was playing only won 1 Grand Slam. Djokovic, in frustration, hit the ball at the U.S. Open, and the line judge went into great drama. And so they defaulted him. I've seen Serena Williams and other people go ballistic, and they never did that. But no, I don't know. They pick on him. So I think he would have won that Grand Slam that year. I'm trying to remember the guy's name. The guy retired. He only won 1 Grand Slam, that one. But then I'm trying to think of a different word. The pandemic shut down everything for a year. So that was 4 Grand Slams. And then in Australia, he was kicked out once, and it was blocked once. So he missed at least 2 Australian Grand Slams, but he's He's about to tie his next win. He will tie Roger Federer with the most wins at the Australian Open. Pretty amazing. All right, I'm running out of things to talk about. Wow, I can see why she did. Yeah, I guess we're not at war. I don't know who Sharon Alfonsi is. I think I know Scott Pelley, but they might get fired by Barry Weiss at CBS News. And I'm sure Barry Weiss became CEO because of her talent. New York City region set to be pummeled with the most snow in decades as monster storm set to wreak havoc. Wow. Jared Kushner shows off renderings of futuristic Gaza with skyscrapers and suburbs. Makes me want to vomit. I hope the profits go to the Palestinians who own that land and lost their families, but it won't. It'll go to the Saudi funders and to, oh God. All right, I think I just got lost in a story about woke not being dead. William Ward says, we do know there's $85 trillion in the AI industry. Astonishing. What I take out of that as it relates to Railtown adds this orchestration bit, which means that when a user is using the data center, they save money. And then the other things help in efficiency. And you have to bear in mind the data center at Hoosier Mooski, I think, is half the cost of alternatives. The combination of the power and the speed, power being hydro power. And I think people are going to come to that data center and like it. And I think that's why everything's under wraps right now, to make sure it works well And like I say, many times I've shown you, Railtown filed with the Canadian Stock Exchange that Rail Engine will be ready. Target date is end of this month. If you assume some slippage, you know, it'll probably be February. So we just got to get through all that, and I hope we do. So I'm going to sign off. I hope everyone prepares for the coming storms. And if you have a fireplace, I used to have 3 fireplaces, which I miss. Or you have a dog. I used to have a dog who I miss. Just make sure you're stocked up so you can sit around your fireplace with your dog and your family and play cards and read or listen to music or whatever. It'll be all right. My main point is there's no need to go out into the storm and fall on your ass and break your hip. Just let it melt. If it takes 5 days, let it melt. Just don't take the risk. You don't need to shovel everything. It can stay till it's safe. And you don't have to drive everywhere either. Just be at peace at home and stay safe. Anyway, I wish everyone peace tonight, and we'll talk tomorrow, I'm sure. Yeah, I don't have, hang on. Yeah, I don't have an appointment tomorrow, so I'll be able to come on. All right, cheers.